It seems like forever ago that I made a video on Affirm going public. And actually, it's been so long that admittedly I started to think maybe they wouldn't actually go public and were having second thoughts. Well, it's no longer something that I need to worry about because Affirm is going public and I do have some updated information for all of you. So let's go ahead and play the intro and let's talk about Affirm's IPO. Hey everyone, thanks for joining me today. My name is Matt, and as I mentioned in the intro, today we're going to talk about Affirm's IPO and go over some updated information that we now have about this new offering. But before we do that, I just have to say, not advice, don't take it as advice. It's not going to be a buy or sell recommendation by any means. This is just for your information purposes only, so do not make any investment decisions based on what I say here. So for this video, what I wanted to cover are some of the basics about this IPO, such as their ticker symbol, when they'll start trading, what you can expect for a share price, as well as how much money they should be receiving through this offering. And then we'll go over just some more finer details, things like their financial statements, their opportunities, their threats, as well as why the delay in this company going public. But to start this off, let's just go ahead and start with the basics here. So the ticker symbol that Affirm will be trading underneath is going to be AFRM. And you can expect to see this on the markets on January 13th, 2021, so this Wednesday. They should be trading around $41 to $44 a share for their IPO, and that should allow for them to raise about $1.08 billion through this offering. Now, if you're like me, I'm sure the question that you've been asking yourself now is, why the delay? Well, let's go ahead and quickly talk about why Affirm decided to postpone their initial public offering. You might recall from 2020, which was so long ago, it seems like already, that when DoorDash and Airbnb hit the public markets, both of their stocks absolutely skyrocketed in share price, making a lot of investors a lot of money, which as an investor, that's something you would view as a pretty good thing. But if you are the company that went public, that is not a good thing because you'll commonly hear that they left money on the table. Now, basically what that means when they leave money on the table, and I want to reiterate right here that when a stock goes public or when a company goes public, once their shares are offered to the public, they no longer receive any more money from that offering. So if the share goes up $50, they missed out on that gain of $50, hence the leaving the money on the table. It might actually help further explain that though if I use DoorDash as an example. So when DoorDash initially was offered to the kind of first tier of investors, it was offered at $102 a share, and they issued around 317.7 million shares, meaning that they did raise around $32 billion. That said though, once those shares actually hit the secondary markets, which is where you or I would be buying these shares, it was trading at around $189, I believe was the peak. So if you were to take the $189 and multiply that by 317 million, basically, that would give you a market cap of around $60 billion, meaning that DoorDash actually left around $30 billion on the table, and that's money that they can no longer get back or receive really anyway without issuing new shares. So that is $30 billion that could have been added to their balance sheet, which would have really helped out a company like DoorDash. That is why Affirm decided to take a step back and hit the drawing boards again for their IPO, which I think was a brilliant idea to make sure that no money was left on the table and that they're ultimately going to maximize the amount of money that they'll receive through this initial public offering. So yes, that does mean that their share price, I think it was supposed to be between, I have my notes here, one second. I actually wrote down some notes today. And they were expected to be trading or wanted to hit the public markets between $33 to $38 a share. Now being at $41 to $44 a share does mean that they'll be receiving more money through this offering, which is something that's going to help them out greatly. Now I just wanted to briefly talk about their financials. Now, since this is a new company hitting the public markets, we really don't know that much and we don't have a lot of data to go back on. But there are two factors I saw that I like the direction they're headed in, and I felt they were worth sharing in this video. So for their fiscal year in 2019, they were able to generate around $264.4 million in revenue. Now in 2020, for their fiscal year, they were actually able to generate around $509.5 million in revenue, meaning that they have almost doubled the amount of money that they've received in revenue. Now, some people might say that's a threat, and I'll touch on that later, but I really like the direction that's headed in, because anytime a company, especially one that's still a relatively young company, is able to double their revenue, means that they're doing something right and helping this business run as efficiently as possible. Another positive from that is if we look at their loss. So let me just also pause here. Affirm is still not profitable. Definitely, they are taking steps in the right direction towards reaching profitability. They're just not quite there yet. So in 2019, their fiscal year loss was around $120 million. They were actually able to decrease that, though, to around $112 million for their fiscal year in 2020. So shaving off around $8 million in net losses. So again, that's not as substantial as doubling your amount of revenue you have, but obviously as you start to scale as a business, you should see your costs starting to increase. So the fact that they're able to almost double their revenue and still cut back their losses means that this company is absolutely putting their money in the right places towards either achieving profitability or just becoming a very well-run company. And given that their CEO was a co-founder of PayPal, I really wouldn't expect anything less, because this is not his first time going through one of these kind of fintech startup companies and helping them go public and hopefully becoming just as big of a powerhouse as we see with both PayPal and Square. I think probably one of the biggest opportunities, though, Affirm still has is that they have around 6,500 merchants that they work with, which, don't get me wrong, that is a lot of merchants, and also one of them being Shopify. That said, I still think there's room for growth in here. 6,500 merchants, again, that is a lot of business to be working with. But I still think that this online payment system, especially not necessarily in the payment system, but more of like a credit system, I think that there's a lot of room for more than just Affirm in the space. I know Afterpay is around as well. Apparently that's a very good company also. But I think between the two of them, they could probably still have another player in this space, and each of them could still be adding more and more merchants towards their platform or on their side. So I think that's going to be their biggest opportunity, and obviously one that I'm going to be watching out for, because if they start to reach around 10,000 merchants, then this company is going to be very successful. At least that's in my opinion and my expectations. So if it starts to reach around 10,000 merchants that they work with regularly, I'll be very excited for that. But I would also like to talk about some of the threats that Affirm has. Now, the first one is probably what many of you will expect for me to say. It's an IPO. So from an investor standpoint, I am not a huge fan of IPOs. I generally like to see them sitting on the markets for a little bit longer. Reason being is because that allows for me to get more info about the company as it is released. We get a better look at their financial data, especially after seeing a few months after them being public, how that's been performing for them. As well as IPOs, we also have their lockout period. So that's when basically any kind of insider or initial investor can sell out of their shares, which again will bring an inherent amount of volatility with it. So IPOs by their nature are a very volatile investment, and they are one that I know many other investors typically wait until maybe either the first quarter results or even the second quarter results before deciding to put their money into it. You know, just look at a company like Airbnb, and that's why a lot of investors do tend to stay away from IPOs. Now, that said, this is still an IPO that I am very excited about. Is it one that I'm going to get into right away? We'll really have to wait until it hits the secondary markets for me to make that final decision on if it's one that I'm going to buy that first day. Odds are it is going to be one that I'll probably hold off on until we have a little bit more information about, but that's my investment philosophy. You might have a different viewpoint on that. Now, another threat that a lot of people are talking about is Peloton. So Peloton, I want to say, made up around 65% of that huge increase in their revenue gains that they had. And of course, that's a good thing for their business, but basically what a lot of people now are saying is, what happens when people aren't buying Pelotons as much? That initial boom really helped the firm, but are they going to be able to sustain that over the long run? Now, personally, I don't necessarily view that as a threat. I think maybe the revenue increases that we see might slow down for the next few quarters, but as they hopefully start to add more and more merchants towards their side, that revenue or the impact that Peloton has should really start to diminish because they have more and more people using their service. So I don't necessarily view the whole Peloton thing as a big threat to this company, and if anything, it sounds to me like that's just kind of some publicity or headline info. I think that now that they have companies like Tonal or other high-end companies, they should be just fine. Again, as long as that number of merchants they have on their team starts to or continues to increase. So that's about all the information that I have for the Affirm IPO. Again, it's coming up soon, so I wanted to make sure I got this video out before they hit the market so you can hear my viewpoint on this. And yes, it is still a company I'm very interested in, but again, I'm going to stay true to my philosophy, and I'm not selling out of positions to get myself ready for this one. I'm just going to wait it out, see what happens on that first day of it being on the secondary markets, and if it's one that's trading over $100 a share, I'm going to wait. If it stays stagnant, maybe gets up to as high as, I don't know, $55 a share, that point I can justify it. But as I've said like at least 15 times throughout this video, I'm not a huge fan of the first day buying into investments just with the volatility and the price swings that come along with it. Some of you might be, and I'm sure a lot of people have made a lot of money buying them on that first day. That's just not my style, and so I like to wait for the best opportunity possible. So I hope you enjoyed this video, and please let me know if you have any questions about this IPO. Again, it is in 2 days, so if you have any questions, try to just ask me sooner than later so I can make sure I get that info to you before they hit the markets. If you like this video, hope you hit it with the thumbs up button, turning the thing blue, because that's the cool thing to do. And if you haven't subscribed already, I just ask that you consider doing so. It's free, it's easy, helps me out, gets me excited to post more and more videos, so subscribe as well if you haven't already, and let me know too if you think there's any info about this IPO that I might have left out during this video, and if it's something that I do feel is crucial, I'll definitely pin your comment so others can see that. Anyway, I'm done here, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, and you're right here with me, and I really appreciate that. But I'm going to let you go ahead, enjoy the rest of your day, and I'll see you next time.